What's up, everybody? Welcome back to Trading Wars. This week, I'm going to be doing a detailed review of all the trades from the week, the best setups. I'm going to be looking at the pre-market plans that I put out every day for free and talking about how you can use those to help guide your trading day. So if you're ready, let's step into the war zone. All right, guys. So what I want to do is each and every day before the market, I post this free pre-market plan on Twitter. And I have all 5 of them here for the week. And then I have the SPY chart for the regular trading hours. And I have the futures chart for the overnight action. And I'm going to be breaking down every day and talking about the best trading opportunities. And I want you guys to be able to see into my mind and what I'm thinking about. All right. So first day was Monday, the 21st of September. And we always need to ask ourselves, where are we opening? That's the first question, right? So I have the regular trading hours. What I'm going to do is I'm going to take these lines and I'm going to put it at the previous day. So this would be Friday of last week, the previous day's high and low, like so. Okay. So the first thing that we see right off the bat at the open on Monday is we are gapping down. We are gapping down below the previous week's range right here. And anytime we have such a big gap down, we have to expect that someone's trapped and someone is losing a lot of money. And in this case, we see that the bulls were trapped. Anyone that bought over here at support right at the open, we gap down below their stop loss and they're losing a lot of money. So let's look at the pre-market plan that I wrote here and let's talk about some of the ideas and the trade setups that could be taken. So I wrote last week's low 32.8075 broke and we dropped 40 points. So that was the start of this gap. And then I said key levels to look in for the rest of the week. So long 32.47 and a quarter, 31.90 to 3200, and then the short 32.8075. So those are just guidance levels that I use in order to read the price action. But I always look at the open, the first few candles to determine, what is likely to happen. I read the price action. So I knew if we're looking at the overnight chart, I knew we had an area of support right here, which was around the 49.3250 area. But when we had this first 5-minute bar, this inverted hammer, and it was gapping down, this was a great short opportunity as there was a lot of trap traders. So this is why I have both charts so that I can see things from multiple views and get the best option. So you could have just shorted right below this low to stop above the high, write this down for a quick 1.5 times your risk and walk away with a little bit of profit on the day. And that was a great trade because we identified that the longs were trapped, okay? And we also identified that we're gonna probably break this pre-market low. So in terms of the plays for the bulls, it was very difficult because the next major level of support that I wrote here was once we broke the pre-market support was 31.90 to 3200. And that's something that's very important because this plays out for the rest of the week. But it doesn't happen on Monday. Instead, on Monday, we find support right here at this 32.20 level. And when you're going against a big gap down and a big drop, you really need to be patient in finding a bottom. So here we have a clear double bottom play where we had 2 tests of this zone. And that's what I like to see before I enter a trade in the opposite direction of the big trend. So we could have entered 1 tick above the high, stop below the low like here, or stop below this low, really doesn't matter. And we could have just held that into the close and came out with a great winner on that day. Okay, so it's about identifying what's likely to happen based on where we gap and combining it with the levels, okay? So going into the next day on Tuesday, so on Tuesday, we gapped up. And when we gap up, I'm looking for primarily the gap fill area to act as an area of support. It's just one of those textbook trading styles called the gap fill. And let's look at what I wrote for Tuesday. So I wrote, we're gapping up, bulls in control from the overnight, but there's major resistance above at 3,300 area. So I'll show you guys that. And the levels long, we want to look at the pre-market support at 56.5 and yesterday's high, which was the gap fill at 71.25. And in terms of the short, we're looking at this 89.50 to 3,300 area. And I'll show you how I came up with that. So let's fast forward on to Tuesday. So coming into Tuesday, I had this level drawn, which was the pre-market resistance, okay? So this is the open right over here. So we don't know how anything's gonna look coming into the open. We don't know what's gonna happen, but I have these areas marked. So I had this major resistance here that I saw that it turned the market overnight. So obviously there were some sellers here, and then I saw this support which turned the market as well. So going into Tuesday, my plan was, okay, if we want to short, it's going to be near this resistance. And right on the third candle of the day, we have this nice inverted hammer right here, which was a great short right below the low, stop above the high for an easy, 1.5. And if you were able to hold through all of this, it could have been a nice 3-hour winner. Okay. And in terms of the RTA, so it was the same thing right here, shorting below the low, covering near the gap fill. And in terms of the play that I took, I went long on this gap fill with the anticipation that we would come back to the highs. And my entry was right over here. And as we came up to this level, this was the zone that I was looking to get out on. And I was able to get out a little bit, but I trailed the rest and got taken out for break even. And then we continued to drop down here. And then this area is very special because, like I said on Tuesday, the pre-market support is around 56.5. So right over here, when we come to 56.5, we have these two doji candles indicating a level of reversal. And this was the low of the day. So you could have entered one tick above the high, stop below the low, and we could have rolled that into the close right here. So that was a beautiful trade as well. All right. So that's Monday and Tuesday. Let's go into Wednesday. So on Wednesday, let me just update these lines. So now this is our new low, and this is our new high right up here. And we started off, we opened inside of the range. So whenever we open inside of the range, so we opened actually really on the previous day's high. So anytime we open on the previous day's high, we know that it's going to either just squeeze and just pop right through, or it's going to be reversed, because this was a major level of resistance from the previous day, right? The previous day's high and low are always major resistance. So let's see what I wrote on Wednesday, which was the 23rd, 22nd, 23rd. So bulls continued the uptrend last night, making new highs, but stalled at 33.1975. So I'll show you guys on the other chart. So long, we had the pre-market support at 89 to 95. We had yesterday's low, which was very far away. And then we had the short levels, yesterday's high 33.0950 and the pre-market high at 1975. So this is the yesterday's high, and the pre-market high is up here. So let's go to that day and look at that. Okay, so coming into the open, the pre-market high was up here, okay, at 33.1975, and we were opening right here, 9:30. Okay, so this lined up with the previous day's high as well, and we can clearly see that from the regular trading hours. So this is why I like to use the regular trading hours. So what happened here is we knew that we're opening on resistance. Anytime we're opening on resistance, we don't want to be going long unless the market can really push through and prove to us that it wants to go long. So we had this nice tweezer bottom candle form right at the open, and normally this is a great sign to go long, but given the placement at the previous day's high, this was a trap. And once the lows of these tweezers broke, we just collapsed for the rest of the day, straight down, right? So in terms of the long on this day, there was one attempt here by the bulls, we can clearly see, and that lost. And that was pretty much it for them. It was a trend day down. So today, that the shorts had full control. And we could see that we put in this double top pattern at 1975, and we opened right around here. So you could have shorted anywhere here with your max risk above this high. And that was a nice downtrend. Okay. So that's Wednesday. And then going into Thursday, we gapped down. And this is where everything comes full circle, because on Thursday, my plan from Monday was that the 3190 to 3200 area is going to be a major level of support, because the reason why is because that was the weekly. So if we go to the weekly chart, that was the weekly mid-Bollinger Band. So I knew that that was going to be a major area of support in the market. Just from all the trading that I've done over the years, that's usually a place where things bounce. Okay, so this was the area. So 3200 is right here, going into 3190 down here. And coming into that day, we were gapping down, but we were gapping down into a major resistance. So my plan on the day was over here, further sell off last night. Anything can happen today, so be patient until you find your play. Long at the pre-market support, 31.99.50. Pre-market high, 39.25, and yesterday's low, 33.20.75. So wait for confirmation at the level. So in the back of my head, I knew we were gapping down, and just look at how much the bears were in control. So you have to imagine that anyone that was shorting up here, when they gap down on Thursday, that they're going to be wanting to cover profits. So we had a nice alignment because we also had the 3,200 area that I was talking about acting as major support. So what happened is right off the bat, we had this retest of the previous day's low, which was a nice short. If you were able to front run it, you would short right here with a stop above the high and then take it down for a quick scalp. And then when we got down to this area, I noticed that the pre-market, we've already kind of based here at this 3,200 area. And then once we put in this candle, I entered right above the high with a stop below the low, and this was a massive winner. We just squeezed instantly, and that usually doesn't happen, but it happens more often with major levels of support. So this was a major level of support from the weekly chart, okay? So that's why I was able to get involved right above here, stop below here, take a quick winner. And after that, I scaled out, held a little bit, and that was it for me. It was done for the day. And going back to the futures chart, so again, this was the pre-market support at this 90 to 3,200 level. So that's where I was looking for. And in terms of the short, there was this little pre-market resistance right around here at 32.38.50. And we had a nice inverted hammer around the zone. And we could easily just entered right below low, stop above the high, and took a quick scalp. Okay, so there were still great opportunities for both sides on Thursday. And then lastly, going into Friday, so Friday, we opened within the previous day's range. So I was expecting for us to chop around in the beginning and then eventually pick a direction. And that's exactly what happened today. Normally, we chop around in an inside day because there's no one really trapped. And then we kind of pick a direction and just take off from there. So going into today, looking at the overnight chart, what we really had was we had this pre-market low all the way down here at 32.06 1/4. And that we opened right over here, and we had this pre-market zone at 32.50s. And we could see here that where we made a low on the intraday was actually the 618 pullback of this move that happened overnight leading into the open. So if you weren't able to get involved down here, you could have just taken the high of this candle with a stop below the low and just run it up as into the close. And that's, you know, what's happening right now is we're just squeezing into the close. So that was a great trade. You could have entered here many different ways, blind orders with a stop here, but basically the market was saying that this is the low. We had a nice hammer candle here, and you would have to, at the open, just find a way to get long whatever candle you take with a good stop loss. All right. And then in terms of the short, so this pre-market resistance, I had this pointed out today. So let's look at Friday. So we're stuck within yesterday's range and neither side is in full control. So long with the pre-market support, 32.06.50. That's the one I showed you. Yesterday's low is below that. And the pre-market high is around 32.58.75. And yesterday's high is at 68 1/4. So if we look here right at the 58.75 zone, we had a nice, again, inverted hammer. And whenever you get these, you could just short below the low, stop above the high, and take a quick scalp, because you have to understand that you're fighting against the trend, right? So these are still good plays to make your money, but you can't get married to those positions. You have to get in and out and at least lock in some profits and then trail the rest at break even. All right. So this video was a bit longer, but I really want to show you guys my thought process each and every day. So it's a combination of the overnight chart and the regular trading hours chart, as well as the bigger time frames to help me get a guidance on what I should be looking for. And I really hope you guys learned something from this video. This is the process that I do every week. For anyone that's interested in my style, please follow me on Twitter, comment, like, and subscribe. I'm also still taking 2 new apprentices this month for anybody that's interested in working with me every day and learning my style and me training them for a month straight so that they can do this for the rest of their life. It's just a one-time cost investment with me, and you work with me until you're profitable. Once you're profitable, you go ahead and do your own thing. And that's what I want to do. That's my vision, is to make profitable traders. There's so many ways, like I showed you guys, to make money. Whether you're short or long, doesn't matter. What matters is that you're using the right levels and your risk management is intact. Okay, so thank you very much for paying attention to this video, and enjoy the rest of your week.